Welcome back. Now, asset managers globally are entering a new era. There's so many ideas to consider, new ways of working. For this next conversation, Hynes will be speaking to Mark Lazberger about leading the investment firm of the future. Mark, once again, is Mark Lazberger, CFA, Chair of the CFA Institute Board of Governors.
Thank you, Rosanna, and welcome all to this session, which is to look at leadership, specifically leading the investment firm of the future, and builds upon work that has been
thank you so much.
Undertaken by the CFA Institute, which has seen 2 reports this year, one titled The Future of Work in the Investment Industry and Changing Organisational Cultures. And I encourage you to look at those when you have a chance. And I think that they're extremely good work that's been done by the Institute. Just by way of housekeeping, and consistent with all the other sessions that have been held both today and also yesterday, should you have any questions, please type them into the questions feature that is part of the app for this conference. To discuss leading the investment firm of the future, this conference is extremely fortunate to have Jean Hynes, CFA of Wellington Management, in the hot seat, answering your questions and maybe some of mine. Jean's had a remarkable career by any standard. She's now CEO leading a firm which is a partnership-based investment management firm managing over $1 trillion. It has 3,000 employees around the world, of which 1/3 are investment professionals. So you can see it's very much an investment management organization. It also brings a global perspective, which from today's discussion, I think that will quickly become evident. A global perspective that relates to not only that as an investor, but also how Wellington goes about conducting its operations around the world. Jean, welcome, and thank you for joining us.
Thank you so much, Mark.
I was just wondering, if we just might, without getting too personal, but I think it'd just be a nice way for us to kind of get a bit of a sense of your perspective on leadership, and particularly in a time of so much uncertainty, and also with the number of attendees that we have here that are a combination of those that are actually, like you and I, charter holders, those that are actually undertaking the CFA program, and those that might also be considering, and we would both strongly encourage them to considering to actually enroll in the CFA program. But I was just wondering if you might be able to give us a little bit of your background as it relates to your time with Wellington Management, because you seem to have broken some rules that seem to, the received wisdom these days is that over the course of an individual's work life, they're going to have 5 or 6 different careers. But you've been at Wellington Management for a long time. And I was just wondering if you could share your experience, but also particularly some of the defining moments or events that have really shaped your career and your thinking about what's important for you as an investment professional as well as a leader.
Great. Thank you, Mark. And it's just a privilege to be here and talking to you and all of everyone on the screen today. If I go back, as Mark said, I've been at Wellington my whole career, and that is almost 31 years. And I graduated from Wellesley College in 1991 at a time when there were not that many jobs. So we had a mini recession and there were not that many opportunities. I had to take a class at Wellesley, which made me have to find a job my junior year. It was one of these famous classes that every college has. And that's how I found my way to the stock market. I worked for a brokerage firm. I didn't really like the brokerage side of it, but I really wanted to know why stocks went up and down. I could verbalize that to recruiters when I was looking for a firm, and I just got so lucky to find my way to Wellington back in 1991. Now, I did start as an administrative assistant, also knowing Wellington was a really flat organization back in 1991, under 300 people, and they were just starting to hire again after the 1987 crash. And they started hiring college graduates in administrative assistant positions to start. And so I did start in an administrative assistant position. And I'd like to talk about my career in sort of the 3 decades. And that first decade was all about learning how to be a researcher. I started in the research department. I still consider myself as part of the research department because I still am an investor under investment research at Wellington. And I got to work in a few, just about a year and a half after I started working at Wellington, I got to work very fortunately with Ed Owens, who was my mentor for 20 years. He was the pharmaceutical biotech investor. And so when I think about my first decade, it was all about learning how to be an investor, how to do research, how to generate insights. And that took, in my first 5 years, I did a lot of training, outside of work, studying for the CFA, taking accounting classes so I could pass the CFA. I had taken economics, but hadn't taken accounting, taking biology classes, all of those at Harvard Extension School. So I would say that was studying to get the skills I needed to be an investor. In my second decade, I would say it's where I learned to become a risk taker and a portfolio manager. So taking on a number of portfolio responsibilities, very much dedicated to pharmaceuticals and biotechnology, becoming an expert in risk taking in those sectors, both on the long and on the long short side. I was a long short investor for 20 years. So that was a skill that I really loved developing. I did in the middle of the 2000s, as you said, Mark, Wellington began to globalize, and I did spend some time in our London office. We could talk about that. That's one of the critical moments for me as a leader. And then the last decade is really, I like to say, about leadership. It was taking over the Vanguard Healthcare Fund when Ed retired. It was becoming the team leader of the healthcare team, which I was for 9 years. It was becoming a managing partner, which is Wellington is a private partnership. I became one of the 3 managing partners in 2014. And I'll have to say, in 2014, I thought I had everything I ever wanted, because I really wanted the people part of it, and I love the investing part of it. And then I would say the idea of becoming CEO crept up on me very slowly. And I think I spending a lot of time with our CEO, our previous CEO, Brendan, just made me think, I can do that. These are the skills I have. And then I decided to spend, my last part at Wellington, giving back to Wellington and hoping that, I'm a great steward, and our team is a great steward of this firm that's been a private partnership for now over 40 years.
But Wellington also has its history that goes back, to the early 30s, isn't it? 1930s?
Yes, the first fund, the Wellington Fund, was 1928 was the first, the founding of Wellington. And I think most probably know, but not everyone knows, that Wellington and Vanguard at once were one company. And there was, and we went our different ways in the mid 1970s. And I would say we are great partners, but I think Wellington's culture, and I suppose Vanguard would say this too, we both were formed out of sort of these crisis moments. And I think our culture and our cultural and shared beliefs are such an important part of why Wellington is successful today.
So that's fascinating, Jean. And it's clearly evident that you've been an investor for a long period of time. The healthcare team that you lead is I believe, not only the largest in the United States, but probably also globally. But and as you pointed out, since the middle of last year, you've become the CEO of the firm. What are some of the kind of things that have been, I suppose, you've identified as being similarities in terms of having been in the part of your career where you weren't CEO, but now that you are CEO as well as also an investor, the similarities that are evident in both those aspects of your role, but also some of the areas that might have surprised you that are a little bit different or maybe new that you've sort of had to encounter?
Yeah, so I would say, one of the things I really do believe in is that everyone has super strengths. And when I think about my super strengths as an investor, we talk about it as our edge. One of the things we work on with Vanguard is, what is your edge as an investor, and do you practice that? And I think my edge as an investor has been, that I connect dots. So I'm a dot connector, and I'm also very strong in relationships. And I think those two strengths have helped me build insights about healthcare, or what drugs are going to be important for the future of medicine, or which healthcare delivery companies would, gain market share. And I think they just apply so much to the CEO role as well, connecting dots about what the future, either what the future of Wellington strategy should be, what our clients need, as well as about the talent, because Wellington is a talent-based business. Those connecting the dots, I think, are skills and strengths that I lean into, that I've lent into as both as an investor, and I'm clearly leaning into as a CEO. I would say also the other part of being a CEO that I think is very similar, or there's similarities to being an investor, is the ability to just operate with a lot of ambiguity, right? So you, as an investor, you need to be very, very comfortable with making decisions with imperfect information, and being able to take risk, and that, I think, that skill set has also served me well as a CEO. And then I think some of the differences, I've been at Wellington, Mark, for when I took over the role, for 30 years. And so, I thought I knew everything about the firm. And then once you actually study the firm, and so I went about studying Wellington like I've studied businesses for my whole career. One of the benefits, I think, is I've probably been in 10,000 company meetings, and have been able to witness, great CEOs and not so great CEOs. And so I studied Wellington as I might study a business. And so I feel like a year in, I know a lot more about sort of the nuts and bolts of Wellington. And maybe the other observation I would say is a lot about being an investor is, especially the way I invest, which I'm a very long-term, low turnover investor, is about studying and reading and meeting companies and digesting, and then every once in a while taking action. I think the CEO role is much more dynamic, day to day, week to week. It's about influencing, because I'm not the one making the decisions. The decisions are really being made by my colleagues who run their functions. But there is a lot about influencing. It's about problem solving with our leaders. And then so you just need to leave a lot of time on the calendar for those impromptu things that come up every day.
So Jean, you raised a really, I think, important point about ambiguity. And, it's sort of, what becomes evident as one's career develops is that the more senior role that someone, or the more seniority one takes on in an organization, the more one needs to have a pretty high level of tolerance for ambiguity. But we're in massively ambiguous and uncertain times at the moment. So stepping into the role of CEO as you have, when you did, is really, it would seem to me that it's kind of a almost different order of magnitude in some respects. Would you agree with that, or is really the framework that you've developed over the years is serving you well, even though we are obviously living in, as many of us say, unprecedented times, but we seem to be saying unprecedented times for an awful long time. So maybe it's just the way life is at the moment. But just interested in your thoughts on how you approach the current environment.
Well, I do think you're right that we are in unprecedented times for the world, obviously, with the pandemic and being in a war and in a period of inflation that most of us haven't ever seen or lived through. But at the same time, there are a lot of parts of Wellington that so many of the frameworks, I think, will serve us quite well in our processes of how we make decisions and how we try to serve our clients and figure out what our clients need. So when you think about it, we're an active management firm. We're trying to serve we wouldn't exist if we can't serve our clients, the asset owners around the world. And so they as well are in this unprecedented time and unprecedented area of how are they going to fulfill their obligations. So I would say that leads to just a lot more change maybe than maybe change or I think the asset management industry is also changing at a higher pace than it has maybe the past CEOs. And so I think the pace of change, I think, is higher. I think our frameworks at Wellington are well suited for us to to work with our clients and figure out how we need to evolve and where we need to make investments. So we're the last, couple of years, where are we going to make investments that will help serve our clients? And we're investing right now. We're hiring. We have, a few years from now, we're going to be closer to 3,500 employees than the 3,000 employees as we invest in areas like privates and alternatives and sustainability, which will touch all parts of our firm. Investing in our core research, because if we're gonna exist as a firm, it's only because we're going to deliver alpha and investment outcomes for our clients. And in this changing world, I think we are clear where our strategy is, and it's about now executing and making sure that we are hiring great talent around the world.
And just on that talent side, it does seem that we're in a period where the long-standing relationship that's existed between an employee and their employer is changing. I was just wondering what your thoughts are about, and obviously it's kind of probably one of the most obvious manifestations is the hybrid working model, but it's probably more than that, do you think? And I was just wondering what your thoughts are on that and where you think the direction of travel might be in terms of how that relationship is likely to develop.
Yeah, so I would say one of the things we hear back from our employees that during this past few years of the pandemic, we put employees first, we put their wellness first, we put their health first, and I think that was extremely well received by our employees. So, we didn't know that. We were all, as leaders of the firm, coming into this period not knowing, not having a playbook, but I think going back to our shared values and doing what was right. I think doing what we felt was right and putting the employees first, that I think has served us really quite well. In terms of the future of work, this is the biggest change in how people work in 100 years. And we are embracing that we're not going back to 2019 and we're not going back to 2021. And so I think as leaders of the firm, all of us, the leaders and the employees, have to figure out how we are going to forge the new way of working. For us, that is going to be a hybrid, 3 days in the office and 2 days working from home. We think if we can optimize both of those, that meaning we strongly believe in one-on-one collaboration and, being in person and the apprenticeship model, all the things that you were missing. There's some great benefits of the last couple of years that we've learned, like the democratization of being global has really been one of the big benefits. But that personal interaction is so incredibly powerful as well. And so we're trying to optimize both. At the same time, we're in the business of insights, future insights. What's the world going to look like? And that requires a lot of deep thinking. So why not do that at home? Why not do that a day at home when you can really look at a model closely, or you can do some deep reading? I mean, so I think if we can optimize both of those, hopefully that will lead to better outcomes in the future. And I would say another thing is that we used to think at Wellington, I told you I spent time in London in 2007 and 8. And when we first decided to globalize our investment platform, we almost literally fell off our chairs, because we always would say that, the Wellington culture is about being in a building together. And I think as we globalized, and it was absolutely the right thing to do for us, as more companies were being founded across the world, we realized it didn't have to be about one building, but it was about our Wellington being together in buildings across the globe. And now I know we now know it's not about buildings. It's about shared values that cross buildings, and it's about the people, and it's about the talent. And so I think we're going to have a more flexible, is this the way to really increase diversity around the world in our workforce? We're going to just be much more flexible about location. We're going to open an office in New York that's been publicly announced for the first time. To just really trying to really, find talent and meet talent. We're a talent-based business where it is, and trying to be flexible, while also at the same time recognizing time together is critical.
Yeah. And just on that, it's sort of, do you sort of view what we've gone through over the last couple of years, whilst it's kind of been tumultuous, but do you see it as being representing potentially a great opportunity for further really positive developments within your firm in terms of how you operate and how you think about the types of services and the types of relationships that you both deliver and also build with your clients?
Yeah, so I think the biggest benefit, if we think about the pandemic from a organizational strategy perspective, is that, Wellington is this, I wouldn't say slow moving, because we've evolved quite a bit organically over the past 30 years, but we're a deliberate organization. Very thoughtful about decision making, and inclusive organization on decision making. I think the biggest benefit of the last 2 years is that I think we are more adaptable as an organization. We're moving a little bit faster. Where you had to change, like everyone had to change and had to change together, and I think that has just created a level of adaptability to try new things, and that I think is going to be really positive for our clients.
Yeah. We've actually got some questions that have been coming from conference attendees. One of them is, what is it like being a woman in the asset management industry and now as a CEO?
So when I joined Wellington back in 1991, there were quite a number of business females in our business that were role models for us, for me in particular, but there were not that many role models on the investment side. And so, but I worked, as I said, with Ed Owens, who was incredibly gender blind. He was all about merit, and all about sharing. If I did something, he would it was all about him sharing credit where credit was due. So I just was incredibly fortunate to both have a company with a great culture, a person I worked with who was very meritocratic, and I loved what I did, right? So I loved investing. But I do think having role models is really important. And so, if you can see someone doing it, you're more likely to do it in the future. So I would say a lot of what I've done has been done with, or I've role modeled, many great men in our organization who have been role models for me. And also I have a lot of peers that are females that I've grown up with, and we support each other. So I think those networks have been really important we started our women's network in 2008. I think that was really important for really learning skills and navigating the world of investing, being a minority together. So I think we're making progress as an industry and as a firm, but there's still a lot more work to do.
And you've been a pretty firm, well, you have been a very firm advocate for DEI, and I was just along those lines, I was just wondering, what specific steps do you think leaders in our profession should consider taking to really see some real progress made in the overall industry or profession?
So Mark, I would say I want to maybe just make a statement that I think the data is so clear and compelling. It wasn't there 10 years ago, but the data is so clear and compelling that diverse teams create better outcomes, better investment outcomes, better outcomes at companies. And we're in the business of insights. And so diverse teams should be even more important to us than even other industries. That's a strong belief that I have. And I think at our firm, we're making progress. And I would say, if I think about the journey of DE&I at our firm, I think it was started with the business networks back in 2008 or 9. And now we have about 15 business networks at Wellington that I think are very important to create authenticity and the ability to come to be your true self at work, that support system. I think we became more deliberate. So, we recognized it, but became more deliberate in the middle of the last decade about, you can't just leave it to serendipity. You have to both, so a number of things we've done in the last decade. One, we have a number of leadership programs, and we make sure those leadership programs are well balanced. And right now at Wellington, we have about 36% of our management team is female. And I think I can go back and look at the leaders that went through that program back earlier in last decade. They gained the skills and the confidence to become leaders they are today. So that, I think, is these leadership programs are very important. We are, I think patience is really important. So when you're looking for a position or someone to add to your team, elongating the process and not necessarily saying, I want to hire someone that knows already how to do this exact special skill, because if you do that, you're more likely to get less diversity in the firm. So trying to elongate and hire for potential and raw skill is another area that has proven to be help us with diversity. And we have, I think everyone at Wellington, we have aspirations and goals to be a more diverse firm. One of the things I like to say, Ken Frazier, who is the previous CEO of Merck, when I was doing my listening tour as a CEO, he said, we need to have humanity represented in our firms. I thought that was a really great way of saying, like, over time, we should have humanity represented in this business. And that's going to take that won't take my tenure. It might take a couple of tenures to achieve that. But that's a great aspirational goal to have. And so then what do we do? What do we do from here to there to make sure that everyone has diverse slates, that we're providing early career, that those programs are very diverse, that we're attracting diverse talent at senior levels, and that we're a firm that's inclusive and that people want to come to. So I think we're doing it on many, many aspects to make a difference.
How do you feel about targets?
I think one of the things that I do believe, if you need to measure, that serendipity is not enough. So if you don't measure it and you don't say, well, if I want to be 10% greater on the investment platform in a number of years, if you don't go back and do the math, like I'm an analyst at heart, and if you don't go back and do the math, you realize you need to make a lot of progress in every single year to be able to even reach a modest change in the overall picture over time. So I do think that aspirations are important.
Getting a number of questions around investment management related issues, and particularly there's a theme coming out which I was also keen to sort of explore with you, which is really around kind of your views around the structure of a modern investment management firm. And obviously Wellington's is a great example, and one that you know extremely well. And that is, how do you actually structure a business that is an active investment manager? Because there is always this kind of dilemma or tension that exists between this kind of understandable desire to get bigger, because everyone likes to grow and to sort of have scale. But you can reach a point where you're just too big, and it has a very adverse effect on the active performance and therefore the overall investment performance that you deliver to clients. You're managing $1.5 trillion as an organization. How do you, and again, it's across a lot of different asset classes, but I was just wondering, what is the approach that Wellington takes to the desire to grow, but also to do it in the right way as an investor?
Yeah, so one of the ways we think about it is, how do we add capabilities rather than assets, or capabilities that help us serve our clients rather than actually growth, right? Growth by assets. If we attract great capabilities and new ways of investing that help serve clients, we will grow. That will be an outcome. The growth is more of an outcome than a set target. I've followed companies for almost 30 years. That's another strong belief I have, that companies that say we're going to grow 10 or 15%, it's more about what you do, in that the growth is an outcome of that. So what Wellington is pretty unique, I would say, in a couple of areas. So we're pretty balanced among the asset classes. So when you think about the biggest change of Wellington in the last 15 years is our growth of our fixed income business and growth in our globalization. So now, as you said, we have about 30% of our employees are in either Europe, EMEA, or APAC. And and half of our business is in fixed income. So those are the biggest changes that we've had in the last number of years. We've always found ways to evolve to help serve our clients. And as we think about what will Wellington look like 10 years from now, I would say we're probably going to have more sustainable offerings. Our active management will have more sustainable integration. We will be greater in the ways we invest in privates. We've started the privates business in 2014, and we have areas that will continue to grow. We've been in the long short liquid alts business since 1993. In that business, we are we're investing quite a bit. We think we can be a platform of choice for long short investors. But it all comes down to we have one integrated model we have one investment ecosystem where we have no CIO. We share ideas across that ecosystem, and then we're really organized by both like a small teams. So we have about 65 small teams at Wellington. So we think a lot about capacity of each team and what, in order to deliver alpha, how big that those teams can be. So that's a very important part of our process. We shut down future growth all the time at Wellington. So it's more about like, I don't think we'll grow by growing. We'll grow by keeping adding talent and keep adding teams, and those teams flourishing. So as long as there are great ideas and ways to look at the world and invest actively, I think that will provide solutions to clients, and ultimately that will hopefully lead to growth of the firm.
Thank you for that, Jean. You know, one of the things that sort of probably strikes many of us is that particularly over the last 20 or maybe even more years, there's been such a focus, particularly around the performance of investment management, and specifically active investment management, on kind of what's happened in the last month, the last quarter, the last year. I was just wondering, you know, from your point of view, what sort of is the time frame you use and you think your clients and indeed the industry more should think about using as it relates to assessing whether active management really is adding value?
Well, the way we look at it in our incentives, you know, the vast majority of our incentives at Wellington or compensation are very much geared to 5-year outcomes. So we have some on 1, 3, and 5 year. Really, if you look through multiple cycles of investors, we probably should have a 10-year outcome. Some of our clients do look at us as a 10-year. What are your results over 10 years? But there has to be milestones over short periods of time. But 1 year is clearly too short. I think 3 and 5 years are good signposts, but really great investors could be in the 4th quartile. We have some great investors that are first quartile over 10 years, and they've spent some time in the 4th quartile. If their style is out of favor. So that you know, I think elongating how you look at investors at Wellington, but still important for us to make sure that underperformance, if people are going through a difficult period, is that due to them being out of style? Is that doing because they haven't evolved? That's still really important for us as managers to make sure that we are fiduciaries of our clients. And we're spending a lot of time at Wellington on how do we help investors grow and evolve over time? Like, you know, I've been investing for 30 years. You know, I don't know everything about investing. And so like one of the things that I think an effort that is being kicked off now is how do we continually help investors grow, evolve? Because the markets, you know, I think one of the biggest changes is the markets have changed dramatically. The structure of the markets have changed dramatically in my 30 years. So how do we continue to help investors evolve their processes and their philosophy? You know, maybe not their philosophy of investing, but how they go about it. How do they incorporate technology into their process and portfolio construction? How do, you know, with sustainability is going to be it's going to be a lot of data. How do you incorporate that into a current portfolio management's process?
Well, I was going to I think mentioning sustainability, which you have a couple of times, because my understanding is Wellington is a PRI signatory.
Yes.
How is that kind of now reflected? And that is a very big change, what's happening more broadly, which I you know, personally think is a very welcome and much needed change. But it's how is your firm actually approaching kind of seeing sustainability thinking evident in the way that you actually put portfolios together and I suppose specifically answer questions that are around kind of the environmental, the ESG exposures that your portfolios have.
Yeah, so if you asked me what a couple of years ago when it was announced that I was going to be CEO, that I would be spending so much time on sustainability, I might have been a little surprised. But I think it became very clear, very, very clear to me that sustainability was going to change the structure of markets. If you think about the last decade, passive has really changed the structure of markets, passive investing, and sustainability will be the next decade, changing the structure of markets. And so for us, we're on a journey like many other firms to both incorporate ESG factors and also meet our commitments in relation to net zero, because we're also a net zero asset management signatory as well. I would have two big observations about sustainability. One is that it is going to be very micro. It's going to be about the path of ESG for 10,000 public companies and also private companies. So it's not one big macro trend. There's many, and each industry has different materiality factors. So it's very complex. It's going to be very micro. I think it's well suited. One of the things I say at Wellington, we should be a leader here because we are an active manager that has a very strong research. Research is our core. So ESG research and how we incorporate it should be a real strength of Wellington. And then the other thing I would say is that data will be really important because you're not capturing the ESG score doesn't tell you anything. It really is about what goes underneath that ESG score. And it's really about what's forward looking. And so we're spending quite a number of resources on how do we get the data in the hands of our researchers and portfolio managers so that they're able to incorporate these materiality factors and then rates, have an ESG rating that's forward looking. That's one of our goals at Wellington that we're working very heavily on. And then how do we incorporate, we've been through a process now where every one of our investors has gone through an ESG philosophy and process panel, and that will be iterative. How do you authentically incorporate it into your investment process?
Thanks, Jean. I think we're sort of down to the last couple of minutes, and there's one question that I'd like to pose to you. In 2028, Wellington Management will mark its first 100 years as an investment management firm. Yeah. I'm just wondering if you could kind of outline, I realize that this is an unfair question, so the accuracy sort of criteria is not going to be there, but having sort of heard you today, I'm pretty confident that whatever you say will come to pass. But I'm just interested, what do you think the next 100 years might look like for Wellington as a firm in terms of what it does, where it does it, and how it does it?
Yeah, so one of my goals, and I said this at the very beginning, is to be, to pass on this amazing firm, be a steward of the firm. So I'm just passing through. I've passed through for 30 years, but hopefully we have created the private partnership is just a gift, and hopefully we'll continue to pass on. It's a gift to be running an asset management firm in a private partnership structure. So hopefully it will endure. It's endured 5 generations. I'm the 5th generation CEO. Hopefully it will endure the next 100 years. I think that's a good guidepost for us to think about. I would say, when I think about the 100 years from now, it really will be about, where is, when you think about the asset management industry broadly, it really is, it is about how the markets go, but it really does correlate very strongly with GDP, innovation, technological innovation, productivity. The markets are very tightly correlated with all of those forms. So for us, I think research, I would suspect research will still be in its core, but we might be doing research quite differently than we are doing it now. I think the structure of markets and will blockchain, I know crypto, I'm not talking more about crypto, but more about will blockchain and some technology of the future change how we do trading or how we deliver products to clients, I think could change quite dramatically. But in the end, I do think there's I think technology will be a bigger part of the business, but insights, I think insights are going to be a human, a factor form for humans. And so if we can continue to attract talent all over the globe and even more diverse talent, I think we will keep generating those insights, and then help capture that innovation in the world, that productivity in the world, and where it's going.
Well, that's wonderful, Jean. We are unfortunately right at the end of this session. I do want to, on behalf of the conference and specifically the CFA Institute, thank you for having taken time out of your schedule to be such an important participant at this year's Global Alpha Summit. So thank you very much. And your comments about, long-term, the importance of culture, these sorts of, and critically the development of talent within people. Talent is such a sort of depersonalized word, but depersonalizing word, but people within your firm is so important. So I think you've explained this so well today, and thank you very much.
Thanks for having me, Mark. Yeah.
I believe now I'm not very good at doing these sort of moderating things, but I think I now sort of we go back to Rosanna. Thank you.